Trajectory Startup, Ideation to Product/Market Fit by Dave Parker. Chapter 5. Startup Economics. Understanding Startup Economics, a Recipe for Success. Cooking up a successful startup requires more than just a pinch of creativity and ambition. Just like in cooking, where precision matters in baking but there's room to fiddle in cooking, startups require a keen understanding of their ingredients. These ingredients are the various aspects of your business, each with its specific role to play: your team, product, distribution process, and the method of capturing value. Following the recipe closely can lead to success, while veering off track could spell trouble. Team building and product value. Your team is the foundation of your startup, and their roles and organization matter. The product or service you offer should be something customers find valuable and worth purchasing. Whether you're building a product or delivering a service, there's a cost associated with designing, developing, and supporting it over time. Don't undervalue your own time. Opportunity costs are real and should be considered. Delivering value and the importance of pricing. Effectively delivering value involves aspects like marketing, sales, distribution, and pricing. Your pricing strategy must cover both the cost of building the product and the cost of selling it. Marketing is essential to make customers aware of your product, while sales and distribution channels need to be well defined. Unit economic costs such as customer acquisition cost, lifetime value, churn, and time to close should be part of your considerations. Capturing value, profits and investor interest. Ultimately, your goal is to capture value in the form of profits. Investors are interested in companies that show the potential for exceptional profit margins. A clear path to profit is crucial, even if your startup utilizes a forever free marketing approach like WhatsApp or Pinterest. However, it's essential to maintain balance in the Venn diagram of building value, delivering value, and capturing value to avoid pitfalls. Startup categories and fundability. Understanding your startup's category and stage of development is vital for attracting investment. Investors tend to focus on markets they know well. You need to ascertain if your startup is truly fundable, both in terms of market potential and the capabilities of your team. The dynamics of founder/market fit play a significant role in investor decisions. A strong team with diverse skills enhances your fundability. Venture power law and investment returns. Investors are driven by the venture power law, where a significant portion of returns comes from a minority of investments. They seek deals that can bring substantial returns, as the long-term nature of venture capital demands disproportionate returns. Your startup's likelihood of success depends on various variables, including understanding startup economics, the market problem you address, your product's uniqueness, and the timing of your venture. In conclusion, building a successful startup is akin to preparing a gourmet dish. Each ingredient contributes to the overall flavor, and the recipe must be followed closely to ensure a delightful outcome. By understanding the components of startup economics and how they interact, you can create a recipe for success that investors will find enticing.